Hello and welcome to Landy's Crypto Corner. Today is January 18th, 2024, and we are staring at charts, specifically the Bitcoin chart here on the daily. And this is the Bitcoin in 60 seconds chart that you often see in the shorts videos here on YouTube and or on x.com under Crypto Landy. Now, this particular chart has the triple Bollinger Band set on it, and it has the support and resistance levels, that being the monthly and weekly areas of interest. Now, we spoke about this on the live stream. Excuse me while I clear my throat there for a moment. We spoke about this on our live stream yesterday that if Bitcoin failed at the weekly here at around 43,200 and specifically failed to take out the wick high at 43,5 to 6, then keep an eye on this low side weekly at this 41.8 level by the lower first. If that area was hit and did not hold up, then we'd be looking for Bitcoin to head down to the lower second standard deviation of the Bollinger Bands. It did just that in yesterday's price action, just barely missing it by $100 here, coming in at 40,600 on the low. Now, if Bitcoin is trading and closing candles below the lower first and this weekly at 41.8, then I would expect it to keep playing around the lows here by the lower second. And the lower second's currently coming in at 40,300. If price continues to head towards it, it will adjust in real time. And this is what you need to watch for. If Bitcoin loses the lower second and the lows of the range here, specifically around $40,000 to 40,150, then I would be looking for continuation down to this weekly support somewhere around $39,000 to the monthly by the daily lower third standard deviation at 38.5. Now, we've seen this area tested as resistance. Bitcoin moved through it, and it has not been retested yet. So, it is a logical retest zone. That doesn't mean, though, that Bitcoin doesn't just come down, swing the lows, get into the mid $39,000 area, and then this area gets front run. That is something to be aware of. So I would watch the timeframes lower than the daily to kind of gauge what happens if we do start seeing Bitcoin head down towards that lower second again. Now, on the other side of that, if Bitcoin does regain this weekly and lower first standard deviation, then the next big area to look up to is this weekly overhead at 43.2 to the basis now, which is coming in at around 43,750. It still needs to get above this wick high at 43.5 to 6 in order to do that. But if we did subsequently see it regain that area and then close above on any medium-term time frame below the daily, then that would make Bitcoin's price action zone overhead available all the way up to this upper first around the monthly at 45.5. Above there, we have the next monthly at the upper second at $47,000. And then, of course, above there, the wick high and the prior bear market monthly swing high at 48,240 to the wick high there at $49,000 to $50,000, depending on your exchange. Now, that's kind of the outlook for where Bitcoin stands right now. Obviously, this is a big move down. It's still in range. But if Bitcoin does start to close outside of that lower second, I would look for it to head down to that weekly monthly area. If it did lose that area, I would then target this weekly here at 37.7 to the weekly just below it at 36.2 to 3 to begin with. Of course, we do also have supports under there at the monthly at $35,000 to the weekly at 34,750. Now, this area was heavily tested as support, as resistance rather, and support. So this would be a very big zone if Bitcoin did begin to lose this weekly, monthly, and then subsequently this big weekly zone here. Then I would be looking for it to kind of be attracted to that that zone down there by the monthly and weekly. Now, Bitcoin hasn't really done much outside of put in a deviation from its current consolidation structure. So I wouldn't necessarily be front running any major downside targets until we see a clear break. Now, in this case, we can see that the momentum pivot for Stoke, and this is a regular Stoke, is at $42,000 now. So that does mean that if Bitcoin does close above $42,000, not only would it be regaining that lower first and the weekly there, but it would also turn the Stoke momentum oscillator to the upside, and of course the pivot would update to the current lows. Now, this also is coming in on high volatility. So we see that BBWP is up around the 85 percentile with the moving average chasing closely behind it. What this really means is that we're not looking at a compression to expansion move. We are looking at more of a range until proven otherwise, and that also means that we could get deviations of that range, meaning deviations to the upside by the upper second, upper third area, and deviations to the downside of the range by the lower second, lower third area. I want you to keep that in mind until we actually see a compression to re-expansion. This is all mean reversion to go back and test supports. Now, when taking this all the way up to a weekly, this is pretty darn clear. This has been an uptrend and a sustained one at that. Let's go ahead and go over to a clean chart here. This is our live streaming chart. Now, you can see Bitcoin hasn't even really put in a high. It's put in a consolidation high. It has put in a swing high up here to $49,000, but it hasn't actually put in a real closing high. If it does begin to close below this particular open from back in early December at around $40,000, at $40,000 even, as I start to lose my voice already, then I would generally be targeting, anywhere around the consolidation weeklies here to the basis, which is coming in at a major level at around $35,000. Now it is currently at $35,521, so it is slightly above that monthly support, but I would still be targeting that monthly support zone down there at 35,000 to the weekly just below at 34,750, possibly even deviations under it. Now, the big thing would be if Bitcoin lost that area. Then we're looking significantly lower down to test that lower first on the weekly chart here, and that is coming in at $29,000. Now, of course, this is going to update as Bitcoin mean reverts back to the basis here, and or the basis moves up to price action as it consolidates. We will see the lower standard deviations start to accelerate in their angle to the upside here. That is provided Bitcoin doesn't fall through the basis towards them. Now, the weekly is showing consolidation or mean reversion. That is, of course, because it is consolidating here. It has lost the upper first at around $42,000, which, by the way, that is the daily pivot. So if it does regain the daily pivot for Stoke at $42,000, it would also mean that Bitcoin is regaining that upper first standard deviation on the weekly. Now, of course, it would need to close the weekly up there to preserve the opportunity to kind of play in the upper first, upper second range, which means that it would still be, the upside targets rather would still be available all the way up to the upper second. Doesn't mean it's going to get there, but if it did close above there, not only would it turn the daily, but if it did bleed over into the weekly, then it preserves the opportunity for more volatile price action between the upper first and upper second. If it does close below it, I would be more biased towards Bitcoin heading down towards that basis. Now, if it doesn't hit that basis before the weekly closes, we will see the basis move up yet again. And I do suspect that this is going to be somewhere around our weeklies just below. You can see that it is currently on our support and resistance chart in between the monthly weekly here at 35,000 and 34,750 and the bottom side of this weekly zone at 36,2 to 3. I do suspect that if Bitcoin hangs out above the basis through the end of this week and closes above it, we will see that basis somewhere around this zone, whether it's right here at 36,2 to 3 or somewhere inside of this zone between that 36,2 to 3 and 37.7. Now, I do want to note something about the 37.7 area. If we go to the monthly chart here, Bitcoin would put in a high if it closed below this open here. It would put in and confirm that swing high that has already been seen and observed on the daily chart and some of the time frames below the monthly into the weekly. But in this case, the 37,618 open here is the area to watch. Now, I really would want to see it drop, for a really big confirmed high, um, and a swing on a close. It would have to drop this area here at 34,650 or so, which is the monthly just below it by the upper first standard deviation there, which is currently coming in at 34,171. Then we can entertain moves from the monthly time frame that can come all the way down to the basis here at around 26,800. Likely, if Bitcoin does close the monthly anywhere above that upper first, this basis starts to aggressively update and get in and around the closes here at $30,000. So that's where you're seeing a lot of those $30,000 calls anyway. So there is confluence there for that. But I've mentioned this before, and I showed it on the live stream. But if you look at the index here, I want to cover this again. I may have even covered it here on the Staring at Charts series. But the first bear market high, so the lower high that basically defines the bear market, or the first lower high of the bear market, is typically swung. You can see when Bitcoin heads down, puts in this lower high in the June. I'm sorry, yes, it's the June candle of 2014. Puts in this lower high in a swing and a close. That close was subsequently confirmed, not this candle, which did confirm the swing by closing below the wick low, but it was actually over here. It confirmed it once it breached the May of 2014 open. We saw that it was a confirmed lower high in the monthly. And in September of 2014, we saw it lose the basis band as well. Came all the way back down to the lower first, a little bit of a double bottom. Yes, it did sweep the lows back there. And then it headed up, regained the basis upper first, started to push that upper second, started to get expansion after compression of the Bollinger Bands here. And then it got that expansion, and what did it do? It swung the bear market lower high, the very first bear market lower high, in this case on a close and a wick. It came back down and spiked into the upper first standard deviation. Now, I do want you to note that we saw Bollinger Band expansion back here in May of 2016, confirming that we were in an expansive phase on the monthly, and this was more than likely going to be a nice bullish retest of support. In this case, it was. It pulled itself back up by its bootstraps here, and then marched right on into its parabolic phase. Now, fast forward a little bit to the next example. We have the 2017 closing highs and wick high. We get the bear market beginning here, but there was no real bear market high. There was no 3 candle structure high put in. It was swing highs that then broke down into what became the macro low. But we didn't actually see the first real bear market 3 candle, 4 candle, whatever you want to call it, high here on a close until the 2019 top that spiked the close open of the 17 to 18 all-time high at that particular time. Now, it did spike the close open all-time high, put in a 4 candle closing structure. So we did get a confirmed 4 candle close lower high. So your bear market lower high, and proceeded to head down, mess around the basis band, push up, fail to actually set and get above the swing highs here, and then came back down. What did it do? What did it do rather? It ran the lower first standard deviation. We then see it move back up the bands here, the basis upper first into that upper first, upper second zone, and it swung the bear market lower high of 2019. Now, this occurred just prior to expansion in this case. It doesn't always have to occur after expansion, but in this case, this puts in a swing of the bear market lower high. Now, in this case, it came right back down to the upper first and then pushed on through to the upper second, kicking off expansion, and then we get the parabolic move. And what do we see here? Well, we see that we have already kicked off expansion, so we have a bit of compression not really a deep compression on the Bollinger Bands here, but we have seen expansion of the Bollinger Bands already occur, and we are pushing up and swinging the bear market lower high of 2022. In this case, we had higher low structure to the off of the higher low on the monthly to the higher high, even a close on a higher high as well as a swing. Comes down, tries to set a higher low, fails. This higher low then becomes a 3 candle lower high, and that was the first lower high of the bear market. Comes down, tries to set a low, fails to do so, sold down again. This is now our macro low after confirming this major low over here in October of 2023. So we're seeing the same thing play out again and again and again. And what has happened in every prior cycle with Bitcoin after it swings the bear market lower high? Well, typically it comes down and tests somewhere around the upper first standard deviation of the Bollinger Bands. In this case, it's coming in around that $34,000 level. Doesn't need to get there right away. This month, if it is going to do it, I would be looking more towards the February timeframe. But, it can even swing down below it, maybe even coming down to test some of the support at 30,500 on the monthly. But this is what I'm trying to say here is none of what we are seeing in the markets right now is surprising. So I want you to keep that in mind as you're going through your charts, as you're planning your trades, whatever direction you're planning for. I want you to keep in mind that this is not abnormal what Bitcoin is doing. It is not because of a failed ETF launch. In fact, the ETFs are doing fantastic. They're eating up the majority. They're eating up more trading volume just on a single ETF in a week than some of the biggest ETFs out there. So a lot of people making the comparison to QQQ, which is does the most volume. Bitcoin ETFs are rapidly catching up, and there's 9 of them trading outside of Grayscale, which has seen more outflows than inflows, but still massive amounts of volume. They're doing very well. It's actually been a really successful launch of those ETFs, believe it or not. But none of this is the result of the ETFs. This is the result of volatility within the markets, exhaustion in some of these areas for buyers in particular, and people getting out. Got to make some profits, and now that there's extra liquidity coming into the market, you can make some profits without moving price down in any massive way. Now, it still remains to be seen if this continues to head down, and if it does, if so, how far. We'll just track it level by level, and it's been pretty easy trading, believe it or not. I know that some people on crypto Twitter and crypto YouTube seem to be having a very difficult time right now. This is not difficult trading. As it stands right now, Bitcoin is in a range. It's pretty clear. If it drops to range lows and gets expansion, meaning it closes below the lower second, preserving its expansive posture here with BBWP over the moving average, then it's likely going to come down and test somewhere around the prior resistance level that it broke through. And that's coming in around that $38,500, $39,000 zone. And then we just take it level by level from there. So I think that's all I wanted to say on the charting side of things. Another thing that I did want to show you guys is if you head over to Crypto Quant, you can make a free account, by the way. This, what I'm logged into right now is the free version, so that there's nothing that I have extra that you wouldn't have access to. But if you come over here, you click on charts, and you come down to derivatives, you'll see the taker buy sell ratio. And I want you to make note of this chart. I'll read the description for you. It says, how this chart works. But the ratio of buy volume divided by sell volume of takers and perpetual swap trades. Values over 1 indicate bullish sentiment is dominant. Values under 1 indicate bearish sentiment is dominant. Well, we are in the bearish sentiment portion right now. if we were to zoom into just November of 23 to where we are currently, or even just zoom into the local January range here. We can zoom out just a little bit. You can see that Bitcoin is currently, it got to a low on the taker buy sell ratio here of about what did it get to? 0.91 is what it actually closed at yesterday. Coming into today, or no, it actually ticked up to 0.96 after all was said and done. It's currently trading back down in between the the 0.91 and the 0.96, about midway there. So it's about a 0.93, I think it says. Oh no, I'm sorry. It's actually at a 0.99 right now. But the reason why I bring this up isn't because I'm showing you that things are bearish. We just looked at that. They're bearish in the lower term time frames. We're still trading within a range. But I want to zoom out here and I want to show you something interesting. And that is that every time that Bitcoin has gotten down here, which by the way, this is the low of of 2022. So this is the macro low down here. This is the major low over here. And I want you to observe that it typically gets down into those the low 0.9 and upper 0.8 region here. So 0.88 is kind of where things tend to bottom out there. And then we tend to see reversals in those zones. So you can go through and you can match up where these lows come in. They don't nail the exact low, but you see that it spikes the 0.88 here twice, and then the low is in. It starts to rise again, turn bullish in these areas, and then up and away. You can see that even on the macro low, it didn't get that deep on the taker buy sell ratio. In this case, it was down at 0.89. And even to get down there, it was around where it currently is at a 0.92, even above where we just saw this come in yesterday. So at that 0.917. Basically, what I'm trying to tell you is Bitcoin is due for a bounce. Don't confuse bounce with reversal. Right now, Bitcoin is in a daily downtrend. So we do have a confirmed swing downtrend, right? So you got your swing, well, this was a swing lower low, but it was a close higher low. Then we had the swing higher high, close higher high. Then we got the close lower low in relation to this last low. Another swing lower or higher low in this case, but we got a closing and swing lower high. So we do have a confirmed downtrend on the daily, but it's all right back into support. That does mean that, what I would generally be looking out for are signs of a bounce that can sustain itself. Now, a bounce can always turn into something more, but don't confuse bounce with reversal. We saw that nice bounce come off the weekly zone. Back here, we can go over to the Bitcoin in 60 seconds chart real quick, just so you can see that the weekly zone did provide a bounce already, but it's still in a position where it could become very bouncy yet again. Until it takes out this high, though, it's going to be a downtrend. So in this case, bounces that fail to take out this weekly on a close at 43.2, still lower high territory on a close. Bounces that fail to take out this wick high or swing high on a close at 43.569, nice. Well, it's going to be lower swing highs, lower or a swing higher high and a close under this wick. That would still be bearish. But keep an eye out for a possible bounce, even if it starts to tick down further. This chart here does not call the low. That's not what it's for. But it does give you, some good counter signals when it starts to get really deep down here and or it stays down here for prolonged periods of time. So as it stands right now, it was all the way down at one point on the low yesterday to a 0.88. Let's go ahead into somewhere just before January 1st. Let's get a little bit further in here. November, December. We'll kind of take it for where it's at in the range here. All right. So we've got October to to January. It's not cooperating here. Hold on, sorry. So we can take October to today. You can see that, it starts to get pretty deep down here, pushing into the 0.9s and upper 0.8s. It starts to reverse, and you can see the signs today in the early trading hours that it may, in fact, shift back up to green. So that's where we got to look out for some of those lower term support and resistance zones that I talked about. If they start to get regained and momentum begins to turn, especially above $42,000, that's where we could see a little bit more of a sustained bounce, and bounce, not a reversal, until we see closures above 43.5 to 6 on the daily. Then we can start targeting lower term time frame resistances at 44, 44.5, and then eventually the daily upper first at minimum. If it does regain the basis, that would be 45.5, and then the highs after that. All right, that's going to do it for me today. I hope that this provided you with some good insight into what's happening in the markets. If you have any questions or comments, go ahead and leave them down in the comments section, or hit me up on x.com at CryptoLandy. And go ahead and leave a like and share this video with whoever you might think finds it helpful. And I'm going to let you go. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe.